my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Invest Associates National Limited. Here is your daily technical analysis of stock index futures. And I'll start with the UK FTSE futures. A new high, but also an outside day and an indecisive spinning top. The second in a row, right at the top of the market. Not something the bulls out there would like seeing, I'm sure. Nevertheless, prices were still very close to the three X targets. Target X in the 70-10 area, the target for the January to March sideways triangle, target X1 in the 70-95 area, the target for the late January, early April rising wedge pattern, and target X2 in the 71-15 area. And that's the full target for the rising wedge pattern. Okay, so target X has almost been achieved, but in between the market and target X1 and X2 lies the upper time, currently 70.26, of the as yet untested late December 2020 to late January 2021 mildly bullish shift pitchfork. Now so far today, I suppose an unsurprising reaction to yesterday's outside day and second indecisive top, with the market opening lower and then heading down. Down through the significant January 2021 high at 69.10 and slowing just ahead of the upper trend line, currently 68.84 of the old January to April rising wedge pattern itself. Now just underneath this is the old March 2020 high at 68.71. Neither of these two looks that strong, but we'll see. German DAX futures. Here's a sedative to all the recent new all-time highs. We had a bearish dark cloud cover pattern yesterday, and also possibly day 2 in a 2-day tweezer top action. We'll know more on that later today. It'll be amusing, plus poetically and I suppose aesthetically pleasing, to see the market drop after spending such a long time in trying to achieve target X in the 15.525 area, as it did on Friday, only then just to drop off. Oh well. For your guidance, in case you haven't heard of me droning on about this target, it was the target for the oft-mentioned ragged mid-September to November 2020 reverse head and shoulders pattern. Now, close by and above target X is the projected 50% Fibonacci line of the October 2020 to February 2021 action. This is at 15.629 level. So please keep a note of that. Overall, very recent bullish Andrews pitchfork from late January to late February is still driving prices higher. We're in between the overhead middle time, currently at 15.760, and the lower time below, currently 15.171. Now so far today, a follow-on lower to yesterday's action. Down below the compound Gann number at 15.309. Down below the lesser projected Fibonacci level at 15.289, which served as a gateway to some congestion formed over the last 2 weeks between roughly that fib at 15.289 and 15.200. However, dipping below the fib is where the market started to get cautious about the downside. US E-mini S&P futures. A lower and bearish Black Crow yesterday, though I'm minded to look at it more as day 2 in a combination with all the new all-time high on Friday in a 2-day bearish below the stomach pattern. As a bearish pattern, below the stomachs aren't that particularly strong, but they do exist, and coming as it has at the top of the market, it is noteworthy. Still above the market is the 50% projected Fibonacci level at 41.82 of the late October 2020 to late January 2021 move. And just above that, at 42.02, we have the 100% projected Fibonacci level of the mid-February to early March move. However, and this is important, over all of this is how the market is still traveling in between the rising upper time overhead, currently at 42.49, and below the middle time, currently 41.32, of the broken but still seemingly important late December 2020, early February 2021 bullish Andrews pitchfork. I had originally planned to retire this bullish pitchfork, but keeping it seems to have been the right idea. So far today, further move down to test the middle time, which has held so far. French CAC 40 futures. A lower though indecisive doji cross yesterday, not what the bulls out there would ideally like to see, especially as we seemingly had little in the way until overhead until the 50% rejected Fibonacci level at 63.48 from the late October 2020 to early January 2021 move. Overall, we are still in between the lower time below, currently at 61.13, and the middle time above, currently 63.95, of the December 2020 to January 2021 bullish Andrews pitchfork. As I have repeatedly said over the last 5 weeks, all is moot until prices move out of those times. Now, so far today, seeming bearish engulfing pattern, which is not that hard given yesterday was an indecisive doji cross. However, the aggression of the move lower is interesting. Back down through the previous all-time high back in July 2007 at 61.69, and now approaching a serious support, the lower time. Watch carefully here. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.